The Bank of England just decided to keep UK interest rates on hold at 5.25% for the second month in a row. Economists are now rapidly changing their interest rate forecasts, with the most common question now being, have UK interest rates hit a peak, and when might we start to see interest rates cut? The current market expectation is that UK interest rates have already hit a peak at 5.25%, and they're likely to stay there until at least the summer of 2024. Now remember, predictions just a few months ago were saying that UK interest rates are likely to hit 6% or above. So you can see just how quickly data is dictating changes to UK interest rates forecast. Now that's because we've seen 2 months of fairly positive inflationary data where price growth has started to cool down, having hit a peak of 11.1%. And that's helped to convince the Bank of England that they don't need to keep rising interest rates too much further to help cool inflationary past what we've already started to see. So, and this is the important bit, according to the latest analyst predictions, UK interest rates are likely to remain at 5.25% through to the summer of next year, where we might start to see rates fall only marginally to around 4.5% in 2025. But what could affect the latest predictions for UK interest rates? Much of this is shaped by inflationary data. If inflation seems more sticky than predicted, then that's going to force the Bank of England to keep UK interest rates higher for longer. Whilst a sharper cool down in inflation to around 2%, which is the central bank's target, could help to convince them to start cutting rates more aggressively than that's currently predicted by the market. Now, UK inflation has cooled down in a steady way since hitting a peak of 11.1% in October 2022 to around 6.7% in the last few months. And what we need to see is a continuation of that trend to help convince the bank to start cutting rates. Now that issue will be complicated even further depending on what happens in the Middle East with the conflict in Gaza and Israel. If we see a marked escalation in the conflict, that could trigger a jump in oil prices, which could therefore have a knock-on effect on inflation in the UK, and that could keep rates higher for longer. One data point to keep your eye on is wage growth data, because this is shown to be much more elevated than expected. And if wage growth continues to spiral higher and higher, that's going to make inflation much more sticky and again force the Bank of England to keep rates higher for longer. Let us know what you think about the current interest rate hikes and when you think rates will start to cut. Add your comments below. And make sure you're subscribed to this channel and keep an eye on XTB for the latest trading and investment news.